Hey folks, Monday the 7th of February 2022. Good morning. Hope everyone's doing well. Bit of a quiet week and certainly a quiet morning here in Europe. DAX and Euro stocks sort of down about a third of a percent on market right now. Oil is just kind of paring back some of the massive gains that it's had last week, but we're down 1.4%, trading 90s, no big deal. I think we should find some support around 90s, if not 88s. The high 88s around 89s actually. And the bonds really coming in to find support in and around where we are right now. So let's go over and have a look at the charts. But really on the slate today, very quiet. We do have Christine Lagarde speaking. I think she's coming in at about 3:45 today. But apart from that, very light docket. So let's see what we can see on these markets. And while I have these European markets on right now, yeah, I'm actually going to switch over on the US markets and we'll see here. So the NASDAQ now doing well, closing the gap that it had opening Thursday going into Friday trade. And so we'll actually just get rid of that. But looming above, we do have this bigger gap in yellow here, which we will have to be tracking, sort of coming in 14,852 and a half up to about 15,110s. So looking at this on the daily. Well, actually, this is a weekly chart here, right? And so you've seen, the volatility from 2 weeks ago on the downside, bought back up, not able to push high to retest on the trend as of yet. And so, this may be a sign of weakness. Certainly, the biggest sign of weakness here is that we have zero attempt really to actually get in and close the gap that looms from above on late last week on the Nasdaq. It's a huge channel that we've had, and we'll be examining this, going forward for quite some time. But I think really, do we have the catalyst for further upside this week? I mean, certainly from scanning through Twitter and a lot of single stock traders I know, they have their scanners kicking off. They're getting very excited about buying dips across the board on a lot of single stock names. But for me, I sort of had to think, well, I don't know if I like that concept right now. I really don't. I think the market's trying to price in, the rate hikes that are coming. I think the market's trying to price in a little bit of Russian risk, which I think is completely overcooked. Um, and inflation. I think the market is also trying to get that priced in, so that it's not very clear times here. We're trading around the 50 exponential moving average. Just let me confirm if that's the true reading, because that may be the 50 weekly, and it is the 50 weekly moving average. So if we kind of look on the daily here, in the SPOOs, you see you have this line in the sand above. You can get rid of that actually right now. We see that target on the trend way above here. So, cannot hold above the 200. So if we do push up and back into the gap here, we may fill the gap, but the 200 and the 20 EMA working as resistance right now, whereas they have been fantastic support really on the way up in this trend. We're now, trading as resistance. If you ask me, I think we're going to breach the 14,370s this week and potentially create new lows for the year on the Nasdaq. I just think there's a little bit of a flight out of quality, or flight to quality rather than into the speculation nature of the Nasdaq. It's a little too hot, if you ask me. And certainly, you're seeing volumes drying up on the retail side, in terms of volumes being able to be traded at the bid or ask has come down from, certainly on the SPOOs, has come down from about an average of 50 clips, 50 contracts to like five, right? And so, that to me, it doesn't say that it's the retail volume is completely drying up. It more says to me that retail is actually now more interested in options and trading options against these products rather than going outright on the futures. Okay, so here we are in the SPOOs on the daily. It's quite busy with a lot of these moving averages going on here, but we did trade back up into this knot of moving averages, all of them working as resistance here: 50, 100, 200, and the 20. So I think back down to revisit the 200 EMA as support now is the best last hope that this market has in order to find buyers and create a new all-time high within this quarter. I cannot see a new all-time high coming within this quarter, just given the whole shape of the market and uncertainty sitting out there. Do I believe in more all-time highs? Of course I do. It's the spoos, but just when is always the question. Let's come back to the bigger concept here when we trade the 200 EMA on the spoos at 43.88 today. Um, I think certainly for now this morning, it's looking weak on this gap it had on Thursday there. Thursday coming into Friday's trade. So, gun to my head, I'd be short this market down to that 200. Is that going to be a singular unidirectional move? I think I think not, because none of these moves really are, and that's why timing is everything. On the Dow, my darling Dow, here we are on the weekly independent structure. We have traded back, boom, up high there last week, pretty much completing the entire pennant move, just falling shy on the tops there. And really, if we look out on the daily chart on this, you kind of, if I can press this a little bit more, like this. Okay, and so you see the structure. We did spend quite a lot of time, quite a few days outside of structure, supported by 799s, which was this kind of double tap low over here. Actually, my face is in the way there. Just let me take that one off. My face. So just kind of this double tap low here from Wednesday, the 7th of July, 21. Right, so we did ultimately just get supported by that, and back on up. Whether we can get higher today, I don't think so. I think there's just a little bit more downside in it, and it feels like we're going to have sort of light volume this week as well. So, with light volume markets, yeah, a lot of people stand out off of the markets. They're not trading. But with that, you get sort of big moves because there's kind of these huge gaps between where the volume is on the book. So those big moves are between those pockets of volume. Just it's very easy to kind of move the market around. I'm not saying for an individual trader, but certainly from a sort of a large sized trader perspective, like if you're a hedge fund or an institution, you could easily bully price around on like volume days and kind of get some serious moves in. So look, ultimately on the 60-minute here, you've got stacked exponential moving average resistance above here. There's a big line in the sand up here for me. I'm gonna actually just tidy this up because it's really quite messy in terms of colors. So you've got the 20, the 150, all setting as resistance above this market right now. So I do see trade coming back down to S2 today on the Dow. So that's it really on the Dow. But it's not the most inspirational. What I really did want to look at today is actually T-notes and the bund. And so we'll start off with the bund. So we're testing into the high here of the 25th of March 2019. It's 165.77s. You can see it's putting up a fight through the 3 o'clock Friday, and again now this morning it's really finding some buyers here. There's a high payout opportunity here should this area hold, right? Whereas you can normally look at like 4 or 5 6 to 1s on other trades. This is kind of paying out about like 10 or 11s if we get back to the 168.48. I don't know if we'll make a bounce to there. We need this area to hold this morning, and I think it's going to hold as long as we don't have word out of Christine Lagarde right now. So, but the biggest thing I can see in the markets is actually T-notes coming into a massive trend support area. So you can see here T-notes on the weekly, the low of the week of the 8th of October 2018, and the low of the week of the 5th of November 2018 gives us this uptrend. And here we sit right now, okay? Here we sit. I've actually got to move my T-notes over to here because I've actually moved my 60-minute T-notes just here on the bottom right. And you can see this morning it's coming into play. So just make this bigger. You can see right now that trend is pretty much at the low of the session so far. And we could probably look to kind of gain here as we lift out of this nice support area on the weekly bar here. Targeting 127, 9.5s. And that's, yeah, something to keep an eye on for the week here. All right, so the Dixie, yeah, just before I go, looking at the Dixie and this kind of dollar environment. I know Reed was talking about this in the daily read, or the morning read, and so yeah, I mean, ultimately for me, look, there's a lot of areas here to be tracking on Dixie right now, but generally, I think, we are below this trend. All right, we've pushed back in. We found support here, and we should, we've pushed, tried to get 97 spot 69s. Didn't really get it 2 weeks ago. Took it back last week. I think this dollar can, really try and make a decent attempt now at 97 spot 69s. Is this the sort of week for it? I mean, yeah, if we have an invasion on Ukraine, yeah, I think so, for sure. But otherwise, I don't really see any catalyst for a massive rebid on last week's downside. And so let's tread carefully with that. And when Christine does start talking today, the euro will take over as driving this correlation bus. Okay, it will. So you want to be right on your euro leg rather than your Dixie leg. Okay. All right. So that's it for me for another pre-US session. Please do click to like and subscribe on YouTube and get a notification whenever we go live. And yeah, have a good trading week. And remember, only take the good trades. Cheers.